Have you transacted in cryptocurrency during financial year 2021? Have you sold cryptocurrencies in the last year and made some good gains? Or do you plan to invest some money into cryptocurrencies? If yes, then don't miss watching the video. Hi folks, I'm Jyoti Arora, tax expert from Clear, where we offer tax compliance and other financial solutions to 400,000 plus growing businesses, 2,000 plus large enterprises, 80,000 plus tax experts, and more than 6 million tax filers. Today in this video, we are going to tell you how the gains on the sale of cryptocurrencies would become taxable. So do watch the video till the end to know all about the tax implication on your crypto transactions. Also, before we begin, do not forget to like, share and subscribe to the Clear's channel for more such informative videos. Let's get started. I know all of you must have heard about the investment which gained the most popularity across the globe during pandemic. Yeah, right. That's cryptocurrencies like Bitcoin, Ethereum, etc. But still, let us understand cryptocurrency in a crisp manner. A cryptocurrency is a decentralized digital asset and a medium of exchange based on blockchain technology. Blockchain technology means consider a digital ledger of transaction that is recorded and duplicated and distributed across entire network of computer systems that are connected on a particular blockchain network. Hence, every transaction could be completed only after it is reviewed and approved by all the network members, making it more secure and transparent. A bit complicated, right? To make it simple, consider cryptocurrencies as digital currencies which were originally designed to buy goods and services similar to our other used currencies. However, since the start, they have largely been controversial due to their decentralized nature, meaning its operation without any intermediary like banks, financial institutions, or central authorities. More than 1,500 virtual currencies such as Bitcoin, Ethereum, Litecoin, Dogecoin, Ripple, etc. exist today. The investment and trading volume of the cryptocurrencies have increased multi-fold despite any precise regulation from the Indian government or RBI. So far, the Indian government has not granted any legal tender status to cryptocurrencies yet. In 2018, RBI tried to impose a ban by restricting banking facilities to the crypto exchanges. However, the ban was ruled out by the Supreme Court on the constitutional grounds and virtual exchanges' fundamental rights. The Income Tax Department also has not come up with any clarification regarding the tax implication on the gains earned from the cryptocurrency transactions. Tax experts have been contemplating the classification of the cryptocurrency between currency or an asset. People use the names cryptocurrency and crypto assets interchangeably. However, classifying it as a currency needs some legal backing from the government, in absence of which it is safe to classify as an asset or a property. Also, the US government has issued a notification classifying it as a property, and thereby US government levies capital gain taxes on its gains. Singapore classifies the gains as business income, whereas UK government also considers cryptocurrency as assets and charges capital gain taxes. Considering that the Indian constitution is highly inspired by UK government constitution, there are chances that even the Indian government follows the norm and classifies it as a property. Even though cryptocurrency is not yet legalized by Reserve Bank of India, you must pay income tax on its gains. All income except the incomes which are specifically exempted by the Income Tax Act are subject to tax. As per the general income tax parlance, the gains on the cryptocurrency transaction would become taxable as either business income or capital gains, depending on the nature of these transactions and investors' intention. Profits from the crypto transactions will be taxed as business income if the trades are frequent and the volumes are high. Else, they will be taxed as capital gains if the purpose of owning them is a long-term appreciation in value and there are fewer trades. This has to be reviewed every year for every taxpayer, and so the taxpayer must take a help of a tax expert for the accurate classification. If the crypto transactions are classified as investments, then they will be classified as capital gains or losses under the heading capital gains. If the sale value of the transaction is more than the cost, then it will be regarded as capital gain. And if the cost is higher than the sale value, then the transaction will be considered as capital losses. Short-term capital gains will be leviable if crypto assets are held for less than 36 months as per the applicable income tax slab rates. Whereas holding for more than 36 months, the crypto assets will be treated as long-term investment and taxed at 20% with indexation benefit. For capital gain losses, there is no directive from the income tax department regarding the treatment of the capital losses. However, if your sale transaction has resulted into a loss, then we suggest you to consult an expert. I hope now you understand under which income head the gains on the crypto transactions will be taxable. If yes, then please type clear in the comment section below. If crypto transactions are reported and classified as business income, then the implication of GST law also needs to be examined. All the direct and indirect expenses will be allowed as deductions from the profits on the sale of crypto assets if classified as business. Also, the profits will be added to the other income and taxed as per the income tax slab rates. Let's see GST implication. The taxable event for GST implication is the supply of goods or services or both. The concept of supply is inclusive of one as it covers a large number of transactions. Services is defined as anything other than goods, securities and money. It includes activities related to the use of money or its conversion by cash or any other mode for which a separate consideration is charged. Considering the above definition, GST may become applicable on buying and selling of cryptocurrencies as supply of goods or services. The Central Economic Intelligence Bureau (CEIB) has proposed to categorize the cryptocurrency as intangible asset and apply GST on all the crypto transactions. Since the government has not defined its taxability yet, the proposal is under discussion and a general rate of 18% may likely become applicable going forward. If your turnover has exceeded Rs 20 lakhs, you may have to consider paying GST on your turnover. Please get in touch with an expert for this matter. Crypto assets can also be reported as income from other sources while filing ITR and taxed accordingly. Income from other sources is also added to the total income and taxable as per applicable tax slab of the taxpayer. Also, there are views to treat the income from crypto assets as speculation business income and taxed as per the highest tax slab. However, until any clarification is received from the income tax authorities, the taxpayers can benefit from classifying it as ordinary business income or capital gains. Even though no clarification has been received from the income tax department, it is essential to report the gains in ITR and pay tax on the gains. In March 2021, Ministry of Corporate Affairs mandatory compliance in disclosing gains and losses in virtual currencies and reporting the value of cryptocurrency as on the balance sheet date can be considered as the first move by the government to regulate cryptocurrencies. Accordingly, changes have been made in Schedule 3 of the Companies Act, which will be applicable from 1st of April 2021. However, this compliance is only for companies and corporate taxpayers and not for individual taxpayers. This was all about taxation on cryptocurrency gains. Crypto regulations are still evolving and all the economies are trying to pave a path around this challenging and new industry. While the investors wait for a formal clarification from the government, the gains from the cryptocurrencies cannot escape the taxability net. So do not forget to report the gains while filing your ITR if you have transacted in cryptocurrency in last year. I hope this video was helpful for you. Let us know if you have any more questions related to this in the comment section below. We will be really happy to help you. Thank you for watching it. Please do like, share and subscribe to our channel for more such informative videos. Also, do not forget to click on the bell icon so that you get an update as and when we upload new videos. Stay tuned for more such updates. Thank you. Bye. Take care.